mean, my guess is, it's just a guess, is that the first stop for gold, maybe now. I mean, I think we're very close to a point of inflection, but I think the first stop will be around 5,000.
And when we value, if I could just say, when we look to value gold, because obviously that's something which our universe is gold and silver. So, and obviously all these other factors are major inputs. But when we try and come up to a value, we've got clients that say to us who are very wealthy, or sovereigns that we deal with even, and they say, "Well, okay, so where do you think?" And when I'm posed the question is, well, where do you think the price of gold will be? And then we're also talking about, you've mentioned dollar hegemony, and if you want to support dollar hegemony, ultimately, it relates to gold, because ultimately the gold's collateralization of US foreign obligation has now reached historic lows. I mean, it's currently around 6%. And I think, when the ratio is always been around 20 to 40%. So if you actually apply those metrics to the price of gold, now you're looking at $6,000 to $12,000 per ounce. I mean, I'm not saying that's the price it should
I
be
think it
today,
should
but
be.
exactly. So, and then if you go into 1980 levels, we were at 100 and, if I remember right, 140 to 1 collateralization of debt to gold. So it was, I mean, that should put gold at 43,000. It's like, basically, I think what we're seeing here is if I mean, dollar hegemony is on a slippery slope. But I think the Bank of International Settlements has introduced Basel III, and I think it's because they see that gold must be revalued. They see Russia, China, and the people you're just talking about, the BRICS countries, all the people who value, who want to back currencies with gold, realize that a higher gold price is actually going to assist them, whereas the Fed is
it's the hope
completely out to lunch.
Andrew, I mean, thank you for that 6% figure. I'm going to use it. I didn't realize. I mean, I've talked about valuing gold in lots of different ways, and I do come up with very high numbers, well into 5 figures, potentially. I mean, I think once gold, and you're absolutely right, gold is never mentioned by a central bank. It's never mentioned by our Fed. But you know who else never mentions gold in any of their conversation about reserve currencies? Is China. You have to infer they're talking about gold because they're scared to mention it. They don't want to. They don't want to see gold. I mean, my guess is, it's just a guess, is that the first stop for gold, maybe now. I mean, I think we're very close to a point of inflection, but I think the first stop will be around 5,000. And we may just keep going from there as the world needs more gold, because you're going to, the scarcer commodities get, the higher your reserve currency is going to have to be in order to allocate those commodities in an effective way. I mean, this whole government of the world is going to have to change, but it doesn't have to affect the sovereignty of countries. And that's what I think we have to recognize. America can get back to its basic freedoms, which we have escaped. I mean, we're not nearly as free as people conceive of us as being.
You've raised so many good subjects today, and I wish we had even more time. But the thing is, what you're doing is what you're actually doing. Your book, what you're talking about now, is providing value. This is pure gold. It's pure gold. And I think people have to listen. If they have to rewind, they should listen to, because some of the things you're saying here are very deep and need to be explored further. But I guess if we had to conclude with a simple soundbite, I mean, what would you suggest the average person should consider doing to protect themselves right
If
now?
I could say one thing, I mean, it can't really be average. Well, yes, it can be. I'm sorry. No. Great question. Buy precious metals. Buy the physical stuff. And I'm thinking
Right.
even people that are poor in the United States can still buy silver coins. You don't have to spend a lot of money. I mean, if you buy a Krugerrand, you usually have to spend an ounce of gold, whatever that is. It's well, it's higher today than it was
Yes.
yesterday, but it's over 1,900 US dollars. that might be too much, but you can buy silver coins, and you can, instead of dollar averaging in the stock market, dollar average, or you may have to average up in silver or gold or both. That would be one thing to protect yourself, and that's what I
I always
advise.
carry around, Stephen, I always carry around one of your beautiful silver eagles. This one is 1902. And what I say, the reason I carry it around is I say to people, I talk about silver, they go, oh, what's, yeah, silver. No, this will buy you, this single dollar will buy you 30 times more than it did in 1902. What more can you say?
That makes the case. And now that you're facing a world in which commodities are becoming scarce for the first time ever in civilization's history, and the reason is it's the first time ever that 85% of the world is growing. In fact, they're defining growth. The middle income countries are much larger now. They crossed the high income countries back in 2015, and now they're much larger. And I would guess in 2021, the demand for commodities probably reached the greatest ever because of the big boost to the world's economy. Well, that meant middle income countries, and they're the ones that are really demanding commodities. They need them for growth. We don't need as many commodities. They're essential and they're critical, and without them we'll starve. But it's the middle income countries that are driving this demand. And for the first time in our history, the middle income countries are not only larger than the high income countries, but growing much faster. And that's why this is a problem that is likely to get worse and worse until it gets better, if it gets better. And I'm praying, literally praying, that it will work out. So yes, the one bit of advice, gold and silver, and physical gold and silver.
Physical. Absolutely. Oh, look, it's been, thank you so much for spending that valuable bit of time with us, Stephen.
Andrew,
I really
learned
would
so
love
much
to come
talking
back
to you, and
circle
you're one of
back.
my heroes. You outed, no, you are. You outed the manipulation. I mean, and it was risky. You actually risked your life doing it. I mean, and you talk about, I mean, really? We talk about Russia poisoning people. Maybe they do. But I mean, is the West really that much better? I mean, look what happened to you for basically just finding out something about what was going on in this very liquid market of paper silver and paper gold. I mean, isn't that true? I mean, there were, if I read it right, I read Wikipedia. They're pretty trustworthy. I mean,
They weren't very happy with me, and I think J.P. Morgan, as in particular, not very happy with, and of course Deutsche Bank and HSBC and all the others. But I think that slap on the wrist that J.P. Morgan got, and this, a lot of my evidence took 10 years for them to do anything about it. But a lot of the evidence and the names of the people we gave resulted in not a manipulation charge, but just a spoofing charge. And spoofing just being one of the tools in the toolbox. And essentially close to $1 billion fine. What is that? A slap on the wrist?
taxi money.
How many days business
Taxi
is
money,
that?
literally. I bet that their taxi bill, their transportation bill, I bet is close to that number.
Well, look, on that note, thank you so much, and really appreciate, and I know everyone will appreciate hearing your sage words. And you ended up by saying, buy physical, buy gold, buy silver, buy physical. It rings in my ears. I'll keep that.
That's, and you did not coach me. That was not rehearsed. I want that to be 100% emphasized. Word to God. I mean, I did not know that was what you were looking for. But if you want evidence for it, look at the performance of gold and silver versus the stock market in the first 20 years of this century. And now I think you can actually include 2021 and 2022, given what's going on with the stock market and what's happened with gold. So, I mean, that's the evidence. The evidence is right in front of you. It's not what I think. It's not all the arguments that we're making, etc. It's what happened the last 22 years. And it's right there. That's all you have to cite. Yes, physical gold and physical silver.